As one of the most popular total stock market index funds, VTSAX is a great choice for anyone aspiring to grow their wealth as passively and as cost efficient as possible. But it may not be for everyone. In this video, I'll talk about reasons why VTSAX might not work for you and 5 great alternatives that you should consider coming right up. If we are meeting for the first time, my name is Sung and I am a husband and father to 3 wonderful kids. On my channel, I love talking about personal finance tips and strategies that have helped my family grow our wealth in our journey towards financial independence. If you too are wanting to grow your wealth so that you can focus on what truly matters, be sure to subscribe so that you don't miss out on anything. Before we go further, I need to state that I am not a financial advisor. This video is strictly for educational purposes only. I recommend you do your own research and if necessary, speak to a professional in your area before you make any type of investment or financial decisions. This video is a continuation in a series of videos I'm doing on Vanguard's very popular Total Stock Market Index Fund and why it's so great for families who are looking to get the most return on their investment for as little work as possible. If you're not familiar with VTSAX or Vanguard or investing, I recommend you watch my previous videos to get caught up on the details because this video assumes that you already have the basics under your belt. I link to those videos down in the description below, so be sure to check those out. There may be several reasons why VTSAX may not work for you. One of the big downsides is that the fund requires a minimum investment of $3,000 just to get started. Before, it used to be $10,000 until late 2018, but still $3,000 is definitely a big hurdle for some of you who are just getting started. Another reason might be that it is going to cost you a lot to buy VTSAX from an account that is not with Vanguard. I know that from me, if I try to buy VTSAX from my Merrill Edge account, it's going to cost me $20 and that is just not worth it. If I try to buy through my Fidelity account, it's going to cost me a whopping $75 and that's definitely not worth it. Another reason might be that it's simply not available in your brokerage account and you don't want to move all your money into Vanguard just to buy in. Or it might be as simple as you just not liking Vanguard as a company and their silly logo of a ship from 2 centuries ago. That's totally cool. Whatever the case is, I dug around the internet, did some homework, and found 5 alternatives to VTSAX that might work for you if any of the reasons I mentioned above hit the spot. Also bear in mind that these are the ones that I thought were worth highlighting, whether it's the fund size or the expense ratios or whatever. There are many total stock market funds out there, and if I didn't mention your favorite, be sure to add it down in the comments below so that I know which ones you're owning or are interested in owning and why, because I'm curious to know which ones are working for you. The first alternative is VTI. VTI is the ETF equivalent of the VTSAX index fund. According to the ETF database, it is the 4th largest ETF by assets under management as of this recording. You may be wondering what exactly is an ETF though, so let's back it up a little bit and walk this through. An ETF basically combines the diversification of mutual funds or index funds with the ease of trading like stocks. For example, the underlying assets of the VTI ETF is the same as VTSAX. It's the total investable US stock market. But what Vanguard does as the VTI provider is that it sets up a fund with those assets and sells shares of that fund to investors. Those ETF shares trade just like stocks. They have ticker symbols and their price fluctuates throughout the day depending on the market supply and demand. You can buy and sell these during trading hours so that you can take advantage of any big price swings. Unlike ETFs, index funds and mutual funds only trade at the close of the day, so you can't do these type of intraday tradings. ETFs generally have lower expense ratios than index funds, and that makes them more attractive. For example, VTI has an expense ratio of 0.03%, while VTSAX has an expense ratio of 0.04%. Now, I talked about expense ratios in a previous Vanguard video, but it is basically the price that you pay to have the fund managed by the company that provides it. Because ETFs trade just like stocks, you can literally buy 1 share of VTI and get all the benefits of VTSAX without having to save up $3,000 to buy into the index fund. Right now, VTI trades at about $150 per share. So you can see how much easier it is for people to get started with ETFs. As for the cost of investing in VTI, you have the expense ratios, but you also have the cost of making trades in your brokerage account. So make sure you contact your brokerage and see what other fees apply when you're trading ETFs. If you're enjoying this video so far, be sure to hit that like button down below and let me know down in the comments if you find that ETFs are a better option for you. The second alternative to VTSAX is FZROX, which is Fidelity's newer index fund. In fact, compared to the other funds that I'm covering, this one is like a baby with an inception date of August 2nd, 2018. On the face of it, there's nothing really special about this fund compared to Fidelity's other total stock market funds, but it made a big splash at its debut when it came out with an expense ratio of 0. Literally 0. It has no expense ratio. It doesn't get any lower than that. One of the big reasons that Fidelity is able to offer this with 0 expense ratio is because they created their own index for this fund to track called the Fidelity US Total Investable Market Index, so that they don't have to pay licensing fees to well-known indices like Standard & Poor's. Compared to VTSAX and VTI, which have a stake in more than 3,600 companies, FZROX fund has only a stake in about just north of 2,500 companies, so it's not as well diversified, but it's still pretty solid. Because it is so new, there isn't any long-term historical data to evaluate its performance, and that's one of the drawbacks of this new fund. Now, expense ratios are one thing, but you also want to have assurances that it's going to perform as expected. Most industry observers would agree that Fidelity made this move to compete better with Vanguard's funds. Not only are the expense ratios lower compared to VTSAX, but also there's no minimum to invest. You may be wondering, how successful has this fund been in attracting new investors? So far, it's been over a year now since this fund's debut, but if we compare the net assets, FZROX has a net asset value about 3.7 billion, while VTSAX is at about 814 billion. So it still has a long ways to go to attract low-cost investors. If you're just starting to invest in index funds, then FZROX might be worth looking into. It is free to buy if you have a Fidelity account. However, I do not believe it is available anywhere else, but you should check with your brokerage. I checked with Merrill Edge and I cannot buy it through my brokerage account there. The third alternative to VTSAX is called ITOT. ITOT is an ETF that is part of the iShares family of ETFs run by an investment company called BlackRock. The iShares family of funds are some of the biggest players in the ETF market, considering they were the earliest pioneers of the product. Between iShares and Vanguard, they pretty much dominate the ETF space based on net assets. Since ITOT is an ETF, it's more appropriate to compare it to VTI than it is to VTSAX. On many characteristics, these two ETFs are the same. ITOT has an expense ratio of 0.03%, same with VTI. They contain a comparable number of companies, and so their performance since inception is pretty similar. Here on Yahoo Finance, you can see that the historical performance is nearly identical going back to their inception date. Because they're ETFs, there is no minimum to invest, and you should be able to buy them in your brokerage account just like any stocks, assuming you pay any trading fees. Now, VTI, as I said before, was trading at about 150 per share. ITOT is actually trading at about $65 per share, so it's a little bit cheaper to get a piece of the action. One difference to note is that VTI is tracking the CRSP Total Stock Market Index, while ITOT is tracking the S&P Total Market Index. But based on the historical performance, the resulting differences are pretty minor. In terms of the sizes of these ETFs, VTI has assets under management of around 115 billion, while the iShares is around 21 billion, so it is much smaller. Now, some of that might be due to the fact that the iShares is a little bit younger than Vanguard's, but I think it's just really a testament to how dominant Vanguard is in attracting and keeping low-cost passive investors. The fourth alternative to VTSAX is Charles Schwab's Total Stock Market Index Fund, or SWTX. Now, if you're not familiar with Charles Schwab, it's another large brokerage firm that is based out of the Bay Area. While they may not be known for their low-cost investment products, I do bring it up to diversify the alternatives for you so that it's not just in terms of index funds and ETFs, but also different companies. The net assets for this index fund is around $9.6 billion, which is pretty tiny compared to VTSAX, but it does come with a lower expense ratio of 0.03%. Another benefit is that there is no minimum to invest, so you could buy into the fund with as little as $50 to $60, assuming there's no transaction fees or any other costs. I tried buying into the fund with my Merrill Edge account, but I was not able to. I also tried with my Fidelity account, but it required a minimum of $2,500 to buy into it, and a $50 transaction fee was applied. So be sure to check with your brokerage because the availability and the cost for you may vary. Now, SWTSX tracks the Dow Jones US Total Stock Market Index, and it holds around 3,100 companies, which is still less than VTSAX, but I think it's still plenty of diversification that I would feel comfortable with it. If you're looking for an ETF version of this, that leads me to my fifth alternative, which is Schwab's SCHB ETF. Just like VTI is the ETF equivalent of VTSAX, SCHB is the ETF cousin of SWTSX. Whew, that is a tongue twister. They have the same expense ratios, they have no minimum to invest, and they're tracking the same index. The only difference is that the ETF is holding around 2,500 companies, while the index fund is tracking around north of 3,000 companies. Just like other ETFs, I was able to buy SCHB in my Merrill Edge account as well as my Fidelity account. And it really goes to show that ETFs are a lot more accessible and cheaper to invest in than index funds. If you found this video helpful, be sure to hit that like button down below and share with any friends that you think might benefit from it. If you haven't subscribed already, be sure to do so that you don't miss out on any new videos. Thanks for watching, and I'll see you guys next time.